In this video, we will talk about the recently launched Nifty Financial Services Index futures and options contracts. Let us start with the basics of the Financial Services Index. This Monday, the NSE launched futures and options contracts on the FINNIFTY Index. The underlying instrument for the FINNIFTY Index is the widely tracked Nifty Financial Services Index. Unlike the Bank Nifty Index, which only tracks the performance of the banking sector, the Nifty Financial Services Index tracks the performance of the entire financial services sector. The index comprises of banks, housing finance companies, NBFCs, insurance companies, asset management companies, etc. For a rapidly growing economy such as India, financial services sector play a critical role not only in economic development but also in the smooth functioning of various sectors of the economy. As a result, movements of the Nifty Financial Services Index tells a lot about the economic well-being of India. The Nifty Financial Services Index comprises of 20 stocks belonging to the financial services sector of the economy. It is a free float market capitalization index. What exactly does this mean? It means the weight of each stock within the index is calculated by taking into consideration only those shares that are available for public trading. Shares that are privately held by promoters, government, etc. are not taken into consideration. The index was launched in 2011, but historical data for the index is available from 1st January 2004 onwards, when the index was assigned a base value of 1000. The Financial Services Index is rebalanced semi-annually. The cutoff dates for the rebalancing are 31st January and 31st July of each year. At the time of rebalancing, no single stock within the index can have a weight greater than 33%. Also, the cumulative weight of top 3 constituent stocks within the index cannot exceed 62%. Let us now talk about the composition of the Financial Services Index. This chart depicts the sector-wise weightage of the Financial Services Index. See that banks occupy nearly 2/3 of the index weight, while housing finance companies occupy over 1/6 of the index weight. Meanwhile, NBFCs and insurance companies each occupy around 8% of the index weight, while the remaining 2.3% is occupied by other subsectors such as asset management companies and PSU lending institutions. This table shows the weights of the 20 individual stocks within the Nifty Financial Services Index. As can be seen, the top 5 stocks within the index occupy a combined weight in excess of 75%. Half of the 20 stocks of the Financial Services Index also form part of the benchmark Nifty 50 Index. These stocks have been highlighted in the table above. Let us now look at the relative performance of the Financial Services Index and talk about some of the key statistical metrics. This chart compares the performance of the Nifty Financial Services Index with the Bank Nifty Index. The 5 banks that are a part of the Financial Services Index account for nearly 2/3 of the index's weight. Each of these banks are also a part of the Bank Nifty Index, where they share a combined weight of a whopping 87.9%. As a result, see that the Nifty Financial Services Index and the Bank Nifty Index move pretty much in tandem with each other. This chart compares the performance of the Nifty Financial Services Index with the benchmark Nifty 50 Index. As said earlier, 10 of the 20 stocks that are a part of the Financial Services Index are also a part of the Nifty 50 Index. These common stocks have a weight of over 90% in the Financial Services Index and nearly 40% in the Nifty 50 Index, Hence, it shouldn't come as a surprise that the two indices are closely connected with each other. This chart shows the relative performance of each of the three indices, Nifty 50, Bank Nifty and Financial Services, since February 2012. For comparison, we have indexed the starting value of each of these indices to 100. As can be seen, since 2012, Financial Services Index has outperformed not only the Nifty 50 index but also the Bank Nifty index. In fact, since its inception in 2004, the Financial Services Index has outperformed both Nifty and Bank Nifty. Unlike the Bank Nifty index, which offers exposure to only banking stocks, Financial Services Index offers exposure to a whole gamut of financial services stocks. This offers the benefit of diversification to other subsectors that fall within the financial services domain. Furthermore, as can be seen in this chart, the weight of banking stocks within the Financial Services Index is slightly reduced over the last 5 years, while that of NBFCs and insurance companies has increased. What this tells us is the non-banking financial stocks are gaining more prominence within the index. Before we move ahead and talk about contract specifications, these are some of the key metrics that we have sort of indirectly discussed so far. The table on the top shows the CAGR and volatility of each of the three indices over three different look-back periods. Since inception of the Financial Services Index, over the last 5 years, and over the last 1 year. See that the Financial Services Index has given stronger returns than Bank Nifty for each of the three look-back periods. Similarly, it has given better returns than Nifty over the long term but has underperformed over a 1 year time horizon. Meanwhile, notice that the Financial Services Index has been more volatile than Nifty but slightly less volatile than Bank Nifty over the three look-back periods. So, when compared to Bank Nifty, the Financial Services Index has offered a better risk-adjusted return over both short and long-term horizon. Meanwhile, the table at the bottom shows beta and correlation of the Financial Services Index versus Nifty and versus Bank Nifty. These figures shouldn't come as a surprise. As can be seen, the Financial Services Index tends to move more than Nifty but slightly less than Bank Nifty. Also, although the Financial Services Index shares a strong positive correlation with both Nifty and Bank Nifty, it tends to be more closely correlated to Bank Nifty given its composition. Let us now talk about contract specifications for FINNIFTY futures and options contracts. FINNIFTY is available for trading on both futures and options. Also, both futures and options contracts are available not only based on a monthly trading cycle, but also based on a weekly trading cycle. At any point in time, there will be 7 weekly contracts and 3 monthly contracts available for trading. The lot size of each contract is 40. So, the total contract value turns out to be around 6 lakh rupees, while the profit or loss would be 40 rupees for every 1 point move in the index. The contracts will be cash settled and the final settlement price would be the closing price of the index on the expiry day. Meanwhile, the expiry day would be the last Thursday of the expiry month for monthly contracts and each Thursday of the expiry week for weekly contracts. For detailed contract specifications, kindly visit the link shared in the video description. Finally, let us conclude by talking about some advantages of trading the FINNIFTY contract. While FINNIFTY is not as diversified as the Nifty 50 index, it nonetheless offers the benefit of greater diversification than the Bank Nifty index. Hence, the index is ideal for those seeking exposure to the entire financial services sector. The Financial Services Index has historically been less volatile than Bank Nifty. Insurance and housing finance companies account for nearly 25% of the Financial Services Index. and these two sectors tend to be relatively stable and less volatile, in turn helping to slightly cushion sharp price swings in the index. Historically, the Financial Services Index has outperformed Nifty and Bank Nifty on most of the key look-back periods. What is even more interesting is that compared to Bank Nifty, the Financial Services Index has offered a better risk-adjusted return on both medium-term and long-term perspective. Nifty has a total contract size of around 11 lakhs, while Bank Nifty has a total contract size of around 8 lakhs. On the other hand, FINNIFTY has a total contract size of over 6 lakhs. Hence, the margin required to trade FINNIFTY will be relatively low compared to Nifty and Bank Nifty. FINNIFTY futures and options would be available for trading based not only on the monthly contracts but also on the weekly contracts. This would provide great opportunities to deploy multi-legged strategies on futures, options, or a combination of both. Trading on FINNIFTY futures and options contracts commenced on 11th January 2021. To encourage active participation, the exchange has decided to waive off transaction charges on the trades that are done on FINNIFTY F&O contracts until 30th of June 2021. We are pleased to inform that FINNIFTY F&O contracts are available for trading on our FYERS platform. Also, we have decided to waive off brokerage charges on the FINNIFTY F&O contracts until the end of February 2021. With that, it is time to sign off. If you liked our video, do not forget to click on the like button below. Also, hit the subscribe button to subscribe to our YouTube channel and the bell icon to receive regular updates from our side. Thank you for watching this video.